Hello everyone, welcome back to Upside Down Data. Well, I think all of us know that today has been a very rough day in addition to the last couple days, which have been extremely rough and capping off what has just overall been a pretty terrible week in the crypto markets as well as the traditional markets. And I certainly empathize for folks who have lost a large chunk of their portfolios. Certainly anyone who had exposure to the UST and Luna markets. It has been an extremely brutal last few days for anyone who had stake in those protocols. So what I want to talk about today is just what some of our indicators are making of this crash, because that's no other way of putting it. This is the crash, and I think the question that we're all asking is, was that the crash, or is this the beginning of the crash, right? Is this the capitulation that we've been waiting for, or is this the beginning of the capitulation that many folks we're calling for? So there's a lot of different data to go through, so I'm going to go ahead and just jump right in, talking about some of the indicators that we look at here on the channel to get some idea of what they are, what they're making of the recent price action. So I'm going to be focusing a lot on Bitcoin today, just being the premier crypto asset. You know, altcoins are getting absolutely destroyed right now. I want to talk a little bit about what Bitcoin is doing in the face of all of this, because again, if somehow Bitcoin's able to come out the other side of this in a positive way, then altcoins will start recovering with it. But certainly it's going to be Bitcoin driving the show in a lot of ways. And then obviously the macro picture also playing a role. So we're looking here at the TCI, the trend confidence indicator. So this is an indicator that basically tells us whether or not essentially we should believe the trend we're in. How confident should we be in the given trend? If you're in an uptrend and the TCI is green, that's good news. If you're in a downtrend and the TCI is red, that's bad news. And you'd want to look for being in a downtrend and the TCI flipping green. That might suggest that the trend is likely to reverse soon. And really what we're seeing now is similar to what I discussed a few days ago back in this area over here. TCI is saying believe this downtrend, obviously. I mean, I think it's kind of obvious now at this point. Yes, this is a downtrend we should very much believe. And right now, the TCI is not giving us any signs that we should stop believing anytime soon. You know, one of the things that you can look for beyond it just flipping green is just, is it charting a course back to the upside? You know, we saw that coming off of the crash here in May of 21. You know, the TCI was plotting in, saying higher highs, higher lows, all the way up through until it eventually broke green. We saw that again here, where all the way down through here started moving back to the upside and then was able to flip green as we actually went back up to 48K. But then as we went down, and it was right around 43K that it flipped red again, and then that has now precipitated this massive move down to the downside. And so we can see that the TCI is basically telling us be as confident in this downtrend now to the same degree as it was back here going into December of last year. And really then the one that would be next farthest down here would be the crash in May of 21. Now I also wanted to zoom out a little bit more and look at the full picture of the TCI across Bitcoin's entire price history, just to get a sense of how this level of confidence in the downtrend essentially compares to historical levels that we've seen in the past. What we can see is it's not totally unusual, right, for the TCI to flip down to these levels. You know, it's certainly not unusual in bearish conditions to see the TCI flipping down to these kinds of levels. You know, the most extreme cases have been the COVID crash, but then also some of the crashes off all-time highs. The TCI has been very confident that that downside was likely to continue coming off of those levels. So this is not totally extreme from that particular perspective, which in some ways might be seen as concerning, because if we see something like the COVID crash, a lot of people, you know, on crypto Twitter, for example, are comparing what has happened to the COVID crash. But from this model's perspective, we're not at that level yet. You know, we're not at the level of confidence in the downtrend as we were back then. And then if you're using that as kind of a potential bottom signal, it's not suggesting that at all right now. And so really, I don't see the TCI as being very useful in terms of calling bottoms. More what it's trying to do at this point is to say how confident should we be in this trend. You know, it might start actually front running a bottom when we eventually get there. That's what it's done oftentimes in the past. That's actually been front running, moving up before the bottom's even in. That's where I see it as being a potential early warning that the bottom's coming. But its level in and of itself is not often going to call the bottom, right? Because often it'll peak in this case to the downside, well before the bottom actually forms. You know, here it peaked in May of 21, which was of course months before the bottom actually formed, but it was giving us early warnings that this bottom was coming. And then when it eventually flipped green, that was, you know, just a few weeks before then the trend actually broke back up to the upside. That's what I'm going to be looking for, is when does this actually start charting a course back to the upside, because that might be giving us a better sense of when the bottom might be forming, rather than it just falling down to the downside. So from this model's perspective, you know, it's not acting in the way that would make me super hopeful that a bottom is forming right now. Doesn't say that it can't. Certainly it could, but I'm not seeing any reason why this has to be the case. And the other thing that's nice about this model is we can probe it to ask what price level it's looking for to be this cutoff between bullishness and bearishness. You can see that it's looking at the high 30Ks. It's looking at 38.8K as being that level it would flip green again. You know, we're trading well below that, almost $10,000 below that per Bitcoin right now. So really, you know, this model's saying that given all this downside momentum we're seeing in all this, there's no reason to be hopeful. That it would actually demand Bitcoin to show quite a bit of strength before it would start thinking that maybe we're actually going to move back into an uptrend. So just something to keep an eye on. And in confluence with this, we can also look at our new model that we just released on the channel, the Market Direction Classifier, MDC. And this one is a little bit different and is focused on the TCI. So the TCI is more focused on short-term trends or shorter-term trends. It's just basically, the TCI is just going to look at whatever trend you happen to be in at the time and then tell you how confident you should be in it. The Market Direction Classifier is trying to be more macro in its scope and really identify these bear markets, these long drawn out, and these bull markets. So it's trying to basically flip red in cases where you're going to expect more of a protracted downside, or flip green in places where you might expect more protracted upside. And what you can see is that by and large, except for that little move back up to 48K, it has been in the red. It has been saying this is a bear market and to be cautious, and it really hasn't seen any reason to be optimistic yet. And again, with this model, just with the like the TCI, the algorithm for the MDC is very different from the TCI, but the nice thing about it is that it too allows you to probe the exact level that it's watching for flipping bullish, and it's actually demanding even more from Bitcoin to flip bullish. It's actually wants to see price reclaim, you know, 40.7K before it would start actually seeing that as potentially a bullish sign. And so really from these trend indicators perspectives, there's no real reason to be too excited yet. That we're in a bear market, we're in a downtrend. The TCI is saying to believe it. The MDC is saying we are indeed in a bear market. And really until Bitcoin starts showing, unless Bitcoin will show some extreme strength right now, there's not really any reason to believe that this is going to end anytime soon. Doesn't necessarily mean that the downtrend has to continue, but at the very least, it's not saying that we're just going to go ripping back to the upside immediately from these models' perspective. So these are still suggesting caution. There have been a lot of people who are calling the bottom in already. Maybe that's the case, but really from these models' perspective, they're just saying there's no reason to get excited if we stay below these critical levels. Now, these critical levels are dynamic. I'll be giving updates about what they are as they progress throughout time, but those are the levels that currently exist that it's looking for. Now, let's switch to a different type of model that we look for a lot. This is kind of our premier model, the upside downside potential indicator, our risk model here at the channel, showing you the long-term move that's reacted to moves that play out over months, so more macro in its focus. And really what we can see, and this is something we had talked about leading up to this, was that the long-term GDPI had been moving back up more towards the neutral. And we actually see this a little more clearly if I just flip over to the raw output of the model. You can see it's been tracking up closer to zero. And one of the things that we've been talking about is that might have been the model basically pricing in the possibility of a capitulation, or basically saying that a capitulation was more and more plausible, and so therefore the floor was growing, so it was moving. It was basically saying there was more realistic downside potential coming in than existed back when we bottomed in, you know, January and had that move back up. So what I'm going to be looking for on the long-term UDPI is, where do we go from here? And it's going to really depend on, does this capitulation take us down below the summer lows and down into the 20Ks? And that would really start chewing up some of this downside potential, I would expect. And there are kind of two things I'm going to be looking for when I'm looking at this, right? So the first is, if we do find a bottom at this kind of low range, you know, of the summer, going back then to January 21, if we do find a bottom here, it can start moving back up. I want to see, can we hold this kind of trend line you can see forming as higher lows on the UDPI? I've talked about this before, where in bullish conditions, you'll set in higher lows on the UDPI as you go through, setting in higher lows all the way out. And here, we've been setting in higher lows on a pretty consistent trend line right here. So the first level I'm going to be watching is right around here, a bit above -3. Can we find a bottom, reverse back to the upside? That might mean that we can still maintain some kind of bullish structure within the UDPI, which might suggest we don't have to capitulate down further. And even though this has been a whole lot of volatility and craziness, it might suggest that upside would be possible. But if we don't do that, and I think it's extremely plausible we don't, especially if price really dumps down to the 20K levels, then what I'm going to be watching for is when do we re-enter some of this zone, these zones down here, and what's going on in the more macro picture at the time when it's happening. Because what you can see is that every single time the UDPI, the long-term UDPI for Bitcoin, has entered this -4 to -5 range, has been the absolute best time historically to buy Bitcoin. The bottom of this correction back here, 2012, the bottom of the bear market, kind of this double bottom that we had in the 2015 era, and then the final capitulation back in 2018, we dipped way down, and then also the COVID crash, we dipped down to that level. And so really what I'm saying with looking at the macro picture, or excuse me, the macro picture in context of this, is that if there's some signs of relief on the macro picture, let's say inflation is getting under control, let's say the Fed is starting to signal more dovish overtures, and then we are entering this risk band, that could be a signal of incredible value for Bitcoin, and maybe would be, again, the absolute best time to enter. But the reason why I condition that on the macro picture is that if instead we're going to a full meltdown in the stock market, if we're going into a full-on 2008 dot-com bubble burst type of scenario where the stock market is going to crash, 50% plus, then I'd be more cautious of interpreting a re-entrance of this zone as being guarantee of some kind of a bottom, because then we don't even know in that kind of macro meltdown if Bitcoin would be able to maintain this kind of logarithmic bullish structure it's had its whole life. Because again, Bitcoin's never known a full-on stock market capitulation, and so that could be something where new paradigms are coming into play that make these historical comparisons less useful. So that's why I'm conditioning on the macro picture. If that doesn't happen, if we don't see a full-on stock market meltdown and we do enter this range, that could be extremely bullish. But if we do have macro meltdown, I would be interpreting that a little bit different potentially. Just me, should make of the data as you will, but that's how I would be navigating that. All right, so let's turn over to the Bitcoin chart and see where we're at. And as I'm recording this, we're seeing a breakdown below some of these summer lows, right? So these two lines I've created here, these horizontal lines, are basically to the low that we reached in July, late July, then also the bottom of this wick in June, which was the absolute lowest we got in the summer of 21. And you can see that we're actually currently trading below that level of June. We've wicked all the way down a little bit below. You might draw a line from this wick all the way back here in January, saying that's kind of the next level to watch. But really, though, what's concerning about this breakdown that we've been seeing today, and Joe made a great video about this the other day, but I'll just reiterate a couple of the key points here, is that there's not a lot of technical support at these levels, right? If I just have the volume visible range here, starting all the way back in December of 2020, going through, the majority of volume that's transpired has been, well above those levels. We've kind of lost this last level of significant volume, and we're now kind of going into more uncharted territory. And really, if we zoom out and get back to some of these earlier levels down here, we can see there's just clear skies until we get down to here, 12K. Now, would price just slice down through there? Probably not. There'd be buyers who'd probably be stepping in at different levels in the 20Ks, seeing that as being exceptional value for Bitcoin. So it's hard to know really exactly where the bottom would fall. But it was just to say there's not a lot of technical support that exists here. Price moves so quickly up through this in the prior bull run, there's not really a lot of support that exists below here going back down. So that's something that's quite concerning. Something to be watching very closely in the next couple of days if we break down further below the current levels. And if we look at the on-chain data, so this is basically looking at realized price across different price points for Bitcoin across different age bands. And the one thing that I think is remarkable is how much volume has been being transacted at these levels. that is the one thing that is notable more recently. And, you know, if there's one hopeful sign you can take out, that at least we're starting to break out of these kind of low volume blues we've been in ever since the summer, really ever since this capitulation back here in May. We're starting to finally see some sustained high volume on Bitcoin, suggesting that there's some interest coming back in, or people, there's a lot of changing of hands, a lot of moving of hands, or a supply between hands in Bitcoin, with some people stepping in to buy these levels, a lot of people stepping in to sell and capitulate out at these levels. And so this is going to be interesting to watch. You know, can we end up forming a bottom here or not? But certainly there's a lot of volume, and should we start slicing down lower, it'll be interesting. There might be even more volume that would come in, and that would also maybe be manifest on chain like we're seeing here. But just like with the visible volume profile, what we're seeing here is that there's not a lot of cost basis that exists above around 20K, right? You know, this is pretty meaningless amounts of supply in these ranges. There's not a lot. You can see how much just the supply has been moving in the last day dwarfs anything that exists down here. And that's just another thing where there's not really a whole lot of necessarily a lot of support that should be expected at these levels. There's just few people have their cost basis there. And as we talked about before, price becomes more meaningful the closer it gets to your cost basis. So this is something to keep a close eye on as well. And just the final thing I want to talk about then is, you know, let's look at the macro picture, because again, I think that's really, it's been driving the boat, and then the Luna UST debacle really kind of was the catalyst that's really been driving Bitcoin down. But then certainly macro environment has just been reinforcing that. We've just been in an oppressive moves down in the last number of weeks across all of the indices. So this is the NASDAQ. You know, we're looking at 6 red weeks in a row on the NASDAQ. We're looking at the Dow, which is no better here. And then here's the S&P 500, which likewise is just plotting, printing negative week after negative week after negative week. And what I put in here are just some levels just that I've drawn in here where we might just levels I'm keeping an eye on. You know, there's been some interaction with price at these different levels of SP 500 that I've drawn these, but I don't think these offer any kind of meaningful support potentially. Also drew in these lines here. And these are just kind of ones that I'm watching personally. I think there are different ones that you could look at. But one of the main things that I'm looking at is, where would we have to go to get down to the level of capitulation that we've seen in prior massive crashes, which have been around 50%. And that's where I think kind of the COVID lows are an interesting price point, because that is around the percent low that we've seen in prior kind of stock market crashes, the .com crash and the 2008 crash. So just for perspective, you know, the .com crash was down as much as 50% on the SP 500. And then in 2007, 2008, it was down around 58%. And so we just go and look at where that would take us, you know, in this drawdown that we're seeing right now. You know, going down 50% would be a little bit above the COVID lows, 57 would be a bit below. So that's where I see this level just being kind of an interesting one to watch, that you might, in a full-blown stock market crash, if it's as severe as those two, you might expect the S&P 500 to fall all the way back down here to these levels. And one of the things we can actually do is just, if we just take a fractal here of this crash, this is the 2008 crash, overlay it on to the S&P 500 price right here, you know, it's round about something like this. We can see that this would be about, if the exact same thing were to play out again, we end up being down around here. And it could take as long as May of next year, a year from now, for that whole thing to transpire. That's something that people, I think, sometimes forget about with these stock market crashes, is unlike crypto, where a crash can play out over weeks to just a few months, the stock market can be, you know, a year or more that you're having this precipitous move to the downside. Absolutely brutal stuff if that were to happen. Now, obviously, who knows if that is going to happen, right? We don't really know if we're about to see a full-on stock market crash, or if this is going to be kind of more of a smaller correction that we might see. You know, one other thing that we can look at is just, how did the market react back in the 70s, the last time inflation was a really big issue. And one of the things that you'll see is that every single time inflation was spiking, that tended to coincide with, that oftentimes would coincide with bottoms in the market. You see the spike, and then as inflation fell back down, the stock market would rally. Spike in inflation, stock market down. As inflation fell, stock market would rally. And so, but the overall picture that you can see here is kind of a flat stock market, right? There's volatility, moves to the upside and downside that were quite severe. You know, this one here was a 50% move to the downside, with some of these being a little bit less. So, but overall, you're not seeing a very bullish market, and that's, I think, the thing that we're going to really keep an eye on is what happens with inflation. Do we enter into this kind of stagflation type of environment that a lot of people have been kind of talking about as being their main concern in the macro picture? And certainly, if inflation were to get under control, you know, there was the first kind of, or a slightly hopeful thing today that the CPI print was at least below where it was last month, although it was not as low as it was as expected, which is probably partly why the markets have been moving down so precipitously just today, or have been not performing well. I think a lot of people were really kind of holding out hope we get a favorable inflation print that could really maybe take the pressure off the Fed to keep hiking interest rates and reducing their balance sheet. But we haven't. It was kind of a mixed bag to some degree, that it was lower than last month, but it was higher than expectations, and the markets have not been reacting favorably. And so we're just gonna have to wait and see really what ends up happening with this broader picture. You know, until the stock market, until the broader macro picture changes, it's hard to see a whole lot of reason to be optimistic short term for Bitcoin or for any other risk asset. Really, you're going to be seeing everyone trying to call the bottom. You know, I'm not going to try to call the bottom exactly. I think that's a fool's errand to some degree. Really, what I'm going to be doing personally is just watching some of these trend indicators that we have, watch the UDPI, see what happens, and then take that into the context of the macro picture. And should we see some lightening on the macro side, then that might be times where some bottom signals that form and some of these other indicators might suggest that Bitcoin is going to be able to find a base. Wouldn't necessarily mean that Bitcoin would have to rally after that, but I think what we're all just looking for right now is, when is the bleeding going to stop? When is the absolute pain that we're all experiencing going to stop? I think we've all been experiencing pain really since November, and I think frankly a lot of people are becoming disillusioned with the space and leaving, which is frankly in a lot of ways understandable. But that's also kind of the way these things go. When you get into these massive capitulations, that tends to be kind of the final move out of people who aren't really in it for the long term, and that can then form that base for the next move up. And we're just gonna have to wait until when we finally reach that event. All right, if you like the content, remember to subscribe to the channel, give the video a like, and follow us on Twitter. Put a lot of updates about our indicators and more over there.